And in fact, both of course nominally it's a much smaller number than the estimated fraud or criminal activity that happens in the fiat system. But of course, the fiat system is far bigger. The funny thing is when you even do a percent basis, by most reasonable accounts, and there's literature on this, that there's obviously a very big band of uncertainty here. But by most estimates, even a bigger percentage of fiat is used for criminal activity than crypto. Say the third category is more broadly every other altcoin, but that even could be broken up, which is there are attempts at like this difference of opinion of what a blockchain can do, what some of the ideal parameters are. So there's attempts to reduce auditability to make a blockchain more private. There are attempts to increase complexity to make it more expressive in terms of programmability, so that you can have DeFi, you can have NFTs, things like that. There are some serious programmers in that space, and some serious arguments put forth. I mean, you and me would be quite critical of that category.
Alden starts by acknowledging the part of the criticism that is real. The broader crypto industry absolutely has scams, manipulation, and political optics problems, and she does not pretend otherwise. But she argues that McKenzie's critique becomes too cynical when it stops at the headline numbers and fails to compare crypto's illicit use to the much larger fiat system. Chainalysis's latest crime reporting shows that illicit crypto activity is significant in absolute terms, but still represents less than 1% of attributed crypto transaction volume. That does not eliminate abuse. It simply means the story is more nuanced than crypto is mainly for crime. In other words, bad actors use the system, but the system itself is not defined by bad actors. She also pushes back on the idea that transparency is somehow crypto's weakness. If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors who are paying attention. We're here to keep bringing you sharp analysis and voices that understand what's unfolding. Thanks for watching.
Last year, a crypto organization crypto company estimated that $154 billion of illicit activity was financed via cryptocurrency. $154 billion last year, and that was a crypto company that made the estimate.
Here's what's fucking crazy about that. So Donald Trump is literally shilling for the product that allows our enemies to avoid our sanctions. Is that what this ultimately?
Yes.
Wild.
It's wild. And to give you an example of how deep the corruption goes, the biggest stablecoin company by far is this company Tether. And Tether, their broker is Cantor Fitzgerald, and Howard Lutnick was the commerce. Yes, that's how, I mean, guys, we're talking about
through Tether.
Yes.
And who knows what's actually going on, because you said it's pseudonymous. But is it possible that through Tether, Russian oligarchs are moving oil to, let's make it worse, moving Iranian oil to China in exchange for drones and weapons?
Well, it's not possible. It happened. It does happen. I mean, if you can read stories about this.
And Howard Lutnick profits from that.
Or his kids, technically, because he's technically not but I mean, come on, what are we talking about? Yeah.
Holy.
Well, I mean, it touches on an aspect that is real, which is that, this administration does have a lot of kind of crypto grifts going on, things that are either, like optically problematic or outright problematic in many capacities. But more broadly speaking, a point that Ben makes throughout the show is that it's primarily used for like illegal activity. In fact, at one point in the interview, he said like the first usage was illegal activity on the Silk Road, so that completely bypasses the use for WikiLeaks and for other things that predated that. It's the more, like you described earlier, he's either a critic or a cynic of the industry, and I think cynic's the right word, because I think there's a ton to be critical about, especially in the broader space. The broad crypto industry. I mean, both of us have been very critical of it. I think it has to be taken with a very critical lens, including this administration's in many ways activities in the space. A lot of that is completely valid. But where the cynical aspect comes in is to lump it all together, the inability to steelman things and the inability to kind of do contextual comparison. And so, for example, the firm Chainalysis regularly puts out reports on how much illicit activity is happening, and you get these big nominal numbers. But then you say, okay, well, what percentage of that is like of all crypto volumes, let's say? And it ends up being a very, very small number every time. And in fact, both of course nominally, it's a much smaller number than the estimated fraud or criminal activity that happens in the fiat system. But of course, the fiat system is far bigger. The funny thing is when you even do a percent basis, by most reasonable accounts, and there's literature on this, that there's obviously a very big band of uncertainty here. But by most estimates, even a bigger percentage of fiat is used for criminal activity than crypto. And so, in many cases, like a public ledger is the last place you want to do it. Now, of course, there are privacy solutions. So sometimes it is used for this. Another issue that he kind of does in that interview, he assumes that privacy is kind of implied for criminality. And it's interesting because, Jon Stewart's on the left, his audience is on the left. If you actually take these subjects and say, okay, globally, how many people live in very unfree, authoritarian, theocratic, dictatorial, there's across the board. It's like, should those people have alternatives? Should they have access to privacy? Should they have access to be able to transact value, even if a government disallows it? Or would Jon Stewart take the position, as he did on sanctions there, should the United States be able to surveil and control every financial transaction globally? Should we have that capability? Is it even healthy for us to have that capability? Sanctions are one of those things that the more you use it, the more you lose it, kind of. There's already, even outside of crypto, there's already a bunch of organizations from representing kind of the majority of global GDP at this point, and certainly the majority of population, that are looking to build alternative systems, instead of routing every single thing through one country's financial system. And the broader crypto space, whether it's Bitcoin, whether it's stablecoins, whether it's the million altcoins out there, that's just another piece that is available in that kind of broader tool set for various entities to make agreements that go around U.S. sanction capability. So I think on its surface, that those types of numbers will be appealing to many people because they touch on things that are accurate, that there is a lot to be critical in the space, but then they kind of fail to distinguish. And one kind of thing that came up in an interview a couple times is that Jon would even ask for more kind of distinguishment at some points, and he wouldn't really get it back. It would be kind of like put back into a lump sum of cynicism, which I think is kind of it's not the best way to talk about the subject. I think there's just more nuance and more expertise to bring to the field than what's there.
Her distinction between Bitcoin and stablecoins is especially important. In her writing, she notes that stablecoins can be useful because they compress the functionality of an offshore dollar account into a smartphone-friendly format, making cross-border value transfer faster and more accessible than traditional bank rails. But she also warns that stablecoins are highly centralized. The issuer can blacklist addresses, the collateral can be controlled, and the system depends on custodians and regulators. That is exactly why she does not treat stablecoins as a substitute for Bitcoin. Stablecoins are useful settlement tools. Bitcoin is the decentralized monetary base with a very different trust model.
What are the different products that exist in kind of the crypto universe, and what would be the difference between those products?
I would really just separate them into two categories, broadly speaking, which is the speculative cryptocurrencies, which is Bitcoin, Ethereum, and the 20,000 other or more. It was 20,000 a couple years ago. It's probably more now. Cryptocurrencies that the price goes up and down. You can bet on them.
Would that be like Melania coin and Trump? Okay, so that's just a version.
I think so. Bitcoin advocates will argue the tech is slightly different. We can get into that in a separate, there's this different consensus algorithm that runs Bitcoin. It gets a little bit technical.
Oh my God.
It's all stupid. But here's the thing.
Cynicism.
At the end of the day, you're betting that or putting money into it, hoping to make money off of it,
right, through
no work of your own. That's an investment of some kind.
Which, by the way, that's generally how the stock market.
Right. But
that's tied to something.
Exactly. It's not tied to anything in the real world. That's what's so interesting. It's just lines of code stored on ledgers called blockchains. So there's no tie to any real world asset. So what are you investing in? I would argue you're really investing in the story of it and the belief that other people give it value, therefore it has value.
think there's at least 3 and probably more categories, depending on how further you want to break out each category. So I think Bitcoin is pretty much in its own bucket. It's the first one, it's the largest one, it's the most liquid and secure one. It's the most kind of purposely simple and decentralized one, the one that most closely looks like a digital commodity or a protocol rather than a governance system. And so I think that's pretty much in its own category. Also, had a completely different launch process than almost every other asset in the space. Then there's, I'd say, stablecoins are their own bucket. And so they basically say, okay, so there's dollars. There's been a long history of people that have offshore bank accounts, and stablecoins kind of take the concept of an offshore bank account and compress the headspace to like the tech overhead, so that anyone with a smartphone can basically have that capability. So people can have dollar accounts. Essentially, they can transact. This has obviously significant value for a lot of people outside of the United States. Sometimes in the United States for cross-border, anyone who send an international wire more than once has probably encountered some headaches with the opaque and slowness and the expense of that system. So it's basically a technological just improvement in some capacities and kind of broadens access. And that category could also be broadened a little bit more for tokenization in general. So tokenized representations of gold, tokenized representations of highly liquid stocks or other assets. It's basically just a different accounting system that is a little bit more global than, for example, an ETF wrapper and things like that. They're still centralized, but the distribution has certain capabilities that are just not really available outside of that system. So that's a pretty valid category. There is a long tail of crappier assets in the space, but that's another valid category with a different use case. Then I would say the third category is more broadly every other altcoin, but that even could be broken up, which is there are attempts at like this difference of opinion of what a blockchain can do, what some of the ideal parameters are. So there's attempts to reduce auditability to make a blockchain more private. There are attempts to increase complexity to make it more expressive in terms of programmability, so that you can have DeFi, you can have NFTs, things like that. There are some serious programmers in that space and some serious arguments put forth. I mean, you and me would be quite critical of that category.
Yep.
But there is a piece of substance in there, or there are different kind of schools of thought there. And then kind of the fourth category would be just outright memes, things that even the creators know this is a gambling thing that's going to be bet on for a few months or a few years, and then it's going to be irrelevant. And there's really no even promise that this could be something larger. And so there's multiple buckets here of just kind of different assets that lumping them together is almost like lumping Nvidia stock with a penny stock and having an opinion on all stocks, right? So very different kind of category, like set of categories. What was the second piece? I actually talked so long about that.
Yeah, no, it's that there's no real
tied to
tie.
Yeah. So a lot of that is valid for parts of the space, but not all of it. So for example, Bitcoin is tied to physical energy. It's not redeemable for physical energy, but it's tied to it, right? So it basically it's a method of doing a decentralized ledger. And much like how the dollar's not tied to anything, the euro's not tied to anything, the yen's not tied to anything, those are centralized ledgers. And
they used to be tied to gold, for instance.
They used to be tied to gold or other precious
different
metals.
Periods throughout history, fiat monies, or before they became fiat monies, it was paper money tied to gold, for instance.
Yeah, and after kind of the world's biggest rug pull, like a series of kind of gradual rug pulls, they're just purely fiat. They're basically backed by government authority, which is that you have to use this ledger. This is what you can pay your taxes in. This is legal tender. You have to accept it. And various capital controls, various other kind of constraints, taxes put on other competing assets. So they're kind of backed up by government authority and things like that, and they're centralized. And Bitcoin is basically, it's in some ways it's like that, but instead of a centralized spreadsheet, it's a decentralized spreadsheet. So instead of backed by government authority, it's backed by cryptography and energy. So if you have the equipment, you have the energy sources, and then the distributed node network to enforce the rule set, kind of these pieces come together to, at least for 17 years now, run a decentralized ledger. And so, and you're not just betting on the idea, you're betting on some of the properties. I think one of the closest comparisons would be that in the age of the internet, there's been a rise of protocols. So TCP/IP, simple mail transfer protocol, Ethernet, USB, so hardware protocols, software protocols, kind of like just communication standards that become very entrenched. And it's not that hard to just make a version that's slightly different. But that slight difference makes them incompatible. And so it's not that no one can invent, a comparable USB. It's that it's up against the network effect of 10 billion devices in the world having USB ports on them already. And it updates over time in a backward compatible way in many cases, so that kind of network effect updates, but remains kind of consistent. And it's very hard to go up against. And so if you could have somehow, so these are not companies, sometimes they were invented by companies, sometimes they're open source. And if you could somehow buy, if like each protocol was kind of split into a number of units, and you could kind of buy units of that protocol and kind of assess its qualities and assume that it's going to grow, or have a thesis that it's going to grow, that's comparable to Bitcoin's kind of the protocol of value transfer and value storage. On the internet and elsewhere. And so that thesis, I think that's the more Steelman thesis for what people are doing when they're deciding to hold something like Bitcoin.
The strongest version of Alden's reply is not that crypto is spotless. It is that the critique must be disciplined. Yes, the industry contains corruption, speculation, and hype. Yes, stablecoins and altcoins introduce their own centralization and counterparty risks. Yes, some political actors exploit the space opportunistically. But none of that proves Bitcoin is meaningless, or that every blockchain use case is identical. Bitcoin has now operated for more than a decade and a half as a decentralized proof-of-work network tied to energy and network effects. And the longer it survives, the more it looks like a durable monetary protocol rather than a passing fad. That is the analytical center of Alden's response. If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors who are paying attention. We're here to keep bringing you sharp analysis and voices that understand what's unfolding. Thanks for watching.